How to file your taxes as an entrepreneur that wants to get into a home. This was a circumstance that I was in college with, and I was talking with Angelo before we started here. And it's a circumstance that many people are involved in right now. They're self-employed and they want to get into a home, but they do things wrong. They file their taxes wrong and they don't take the right steps to have a business, but also get into a home. Team, we're going to provide a lot of value in this video, so make sure you stick around until the end. If you are an entrepreneur, you must do these three things if you want to get into a house. Angelo, what are these three things?
You must, first and foremost, hire a CPA. You need to recognize the goals that you have for your business, and then you need to plan according to those goals.
Angelo, so one of the points we're starting with here is the importance of a CPA, right? If you're doing it alone, you're going to make mistakes because you can't even recognize your own goals and file your taxes according to those goals, all right? So we're laying it down here, a CPA is important. How much does a CPA cost, and what is the purpose of a CPA?
A CPA should cost anywhere from about $500 to $1,000 at the end of the year once they're filing your tax returns. And the point of a CPA is to help you properly structure your business, your accounting, and to guide you from start to finish on what's allowable, what's not allowable when it comes to write-offs, business expenses, and things like that. And it's setting yourself up for the future for sure.
If you don't plan, it will cost you years before you buy a home. Angelo, what does this look like in business as an entrepreneur?
So, I mean, it could basically look like you getting approved or getting denied for a home loan if you structure your taxes incorrectly. So many times I have, we're reviewing tax returns and people write off all of the income that they made to where that shows that they don't make any income. And the reason that they do that, which I understand the reason that they do that, is because they don't want to pay a lot of taxes. Rightfully so. Nobody wants to pay a lot of taxes. But on the flip side of this, it is a double-edged sword, because if you want to get the best terms for a home loan, if you want to get approved for a home loan, period, you have to pay taxes, right? And so doing it correctly, yes, that you may have some growing pains paying those taxes, but if your goals are to buy a home in the future, to get approved for a loan in the future, to expand your family, then you need to show income. You need to prove that you make money. Because if you don't prove that you make money, it's just going to be hard. It's like having bad credit. It's harder to get anything accomplished if you can't prove that you have any income.
Let's say you make $82,000 a year. There is a right way and a wrong way to file your taxes as an entrepreneur. Angelo, give us those examples.
Yeah. So if you make $82,000 a year and you file your taxes correctly, where on paper you prove that you do in fact make $82,000 a year, then you can basically buy the average home in Charlotte, which is a $481,000 home right now with a 5% down payment. The debt to income ratio around that's going to be 45.98% DTI, which is a little on the high side, but still in approvable limits, right? So they did everything correct. They got a CPA, they game planned, they didn't write off all of their income or they didn't show any money, and they were able to, on paper, show that they actually made this money where they could get a conventional loan, 5% down, with great interest rates and great terms to get into that home of their dreams, right? Now, let's take the flip side of that $82,000 where they could have shown on paper $82,000, but they wrote off, let's say $60,000 of that. Well, that drastically reduces their annual income. And as you can see here, that took you from a $481,000 purchase price to a $125,000 purchase price with 5% down. Now, if you've looked in Charlotte, me and you both know you're not really finding anything for $125,000. Am I right or am I wrong? So that's going to kill you right there if you're trying to purchase a home. Yes, I understand you may have saved $6,000 or $7,000 on taxes, maybe $8,000. I'm just using some generalities here, but yes, you're going to save a little money on taxes. But what's that do for you in the future? That's going to limit your ability to what you can get approved for. And now it hurts you not only just for this year, right? but potentially 2 or 3 years down the road, because we're going to look at an average of the 2 years of what you file. So if you have 1 year that's really bad and 1 year that's really good, we're going to smash those together. We're going to average them up, and it's going to be so-so, mediocre year, right? So you need to, that's why it's going to prevent you from getting a house now and then even maybe a year or two down the road. So it is imperative. You must game plan with the CPA to know what you're trying to accomplish in the future so you can file your taxes correctly. I see so many times, time and time again, where people, they shoot themselves in the foot because they just don't know any better, because they never consulted with anybody, because they wanted to save money. I get it. Everybody wants to save money, but to do things the right way, hire the professionals.
So, Angelo, in summary here, this was for a self-employed person, right? They're making money, but they're also trying to get into a home. Hopefully in Charlotte, North Carolina, we were just looking before at these homes that are well under $400,000. I think the average we saw was $481,000. And we were just looking at houses under $400,000. And there is amazing buying opportunity in Charlotte right now. I'm currently looking at homes in Phoenix, Arizona. And when you look under $400,000, there's a lot of good opportunity there, but not as much opportunity as there is in Charlotte right now. So maybe Charlotte will move up to the top of my list. I want to stay closer to the West Coast. But in total here, Angelo, this is a summary of a person that is self-employed, that has a business, that is 1099, that must game plan properly, correct?
Yeah, correct, 100%. And, it's just doing it the right way. And you're going to have some learning mistakes, right? You're going to have some growing pains. It's understandable. Anybody that's newly self-employed, look, sometimes you feel like you're on a sea, right? You're in a sea, in a raft, in the middle of the sea by yourself. You need to ask your friends, family, if they have any good CPAs. You definitely need to, I can't stress how important it is to hire a CPA to set yourself up for success in the future.
Team, make sure you stick around until next week. We'll have another video for you. And in the future, we'll discuss LLCs, S Corp, C Corp, and what that looks like for you. I remember talking to my CPA, and he was like, Gavin, just let me know when you're ready for your LLC. You can come do it with me. And so that's on the forefront of my future. And so this scenario right here works very well for me. I was a person in college that didn't bring any write-offs to my CPA. I was trying to show as much income as possible to qualify for the best home possible in California. And then I realized it's like, you know what? I don't want to buy in California. I want to go somewhere else. So that's where we're at, team. We will see you guys next week. If you got something valuable here, make sure you like the video. Bye.